And that's why you saw the massive rise and fall. If you look at the Nigerian Stock Exchange, the way it moves, and you look at the typical investor, and I've spoken to a lot of them, in terms of their fundamental analysis of the market, when you talk about efficient markets and asymmetry of information, it doesn't actually, well, to an extent, you have asymmetry of information in the Nigerian Stock Exchange, but a lot of people that actually had access to the information didn't even understand how to analyze the information.
But this Nigerian Stock Exchange, is it fundamentally based? Of course, you see the price movement and all of that. Is it fundamentally based, or is it just sentimentally based, as it were, behavioral patterns?
To an extent, it falls under the realm of behavioral finance. You have a lot of sentiment. But you see, what a correction like what has happened in the last few months does is it forces people to be a little bit more intelligent in their analysis of stock. And I've seen this across board, from regulatory to the man on the street. All of a sudden, they've started asking, why are my stock prices priced at this? What is my intrinsic value of this stock? And so you've seen a trend. Let's not forget that 15 years ago, the stock exchange in this country wasn't necessarily the first outlet people went to. It wasn't well known. A lot of people didn't quite understand it. And sometimes, painful as it is, it takes a market correction such as we've seen to get people thinking along, what are the fundamentals and how do we analyze the fundamentals?
Okay, Nigeria's investment policy, attracting and encouraging more inflows of foreign capital by moving ahead with economic programs. You mentioned earlier, of course, we've seen a lot of roadshows. We see a lot of government delegates going abroad, the US, Europe, Asia, trying to woo investors. Is that also not rubbing off as a poor image on us, as it were? Do you understand what I mean?
In terms of a roadshow being a negative thing,
in terms of both the roadshows and our leaders going abroad, isn't it rubbing off as, okay, probably we don't even have our acts right yet, and bringing back a poor image, as it were? Because for some people, you listen to such fora, of course, a lot of hard questions are being asked. Okay, what are you doing concerning the power situation in the country? What are you doing to unlock the agricultural potentials? What are you doing to be able to make the oil and gas sector much more easy to do business in, and all of that? So don't you see it as trending towards, okay, this country, you really don't have your acts together?
I don't think the road shows in themselves are negative. I think that a great deal of, perception management is required. But I think that, hand in hand with the road shows come, the need to put, the domestic house in order. And, I prefixed it by saying that, capital tends to be very intelligent. You don't need to cajole them into doing things. They're looking for alpha. They're looking for returns. So you create the conditions, they will be here, subject to a little bit of advertising, which doesn't do any harm. But, you mentioned power, for example. If you look at what I believe what the influence of just getting power right would do, if you look at your factors of production, and you're looking at your productivity factors, how much of our GDP growth is hampered by power? And if you're able to replicate what happened in telecoms and what's happened in, to an extent in financial institutions, which is a liberalization of that market, then automatically it tends to be able to look after itself. So I think the steps we're making in that direction, are positive ones. I don't think you're going to get an answer overnight. Once again, I think I'm sufficiently concerned with the trends. And anytime you see a reversal of the trends, that's when you should start getting worried. But if you expect it to be, fine overnight, that's not going to happen.
Okay. Let me read a viewer's comment. In case you want to join the conversation, please feel free to do that. Do that on facebook.com/ABC Money Show Live, as well as views at themoneyshow.org. This is coming in from Samaila Haruna, who's saying that agriculture is the way forward for Nigeria's economy. So much is being talked about as it concerns agriculture. Of course, I talked about it earlier, unlocking potentials in that sector, because much of the foreign investment or the portfolio investment we're seeing in the country is majorly skewed to extractive industries. But I think I should ask you at this point, how much interplay can we see as it concerns the exchange rate? You mentioned exchange rate. Of course, we see the fluctuations most of the time. How much interplay do we have amongst the exchange rate, foreign investment, the external debt, as it were? As this week, I think our debt stood at about $37 billion, both domestic and external, as well as inflation, because these are the parameters that a foreign investor will also look at and say, okay, is it worth my while? What do you think?
I think to answer your question on debt stock, you're still looking at about 19% of GDP. So it's not,
which they say still okay.
It's not
bad.
It's not critical. I think we need to. We need that. So there's so many other fundamental factors that you need to look at. You spoke about inflation. That in itself ultimately, just from an economic point of view, should influence exchange rate. But sometimes it might actually be even more simple in the Nigerian context when you look at exchange rate fluctuations. What's driving it? Is it cost push? Is it demand cost pull or demand push? What exactly is driving it?
What do you think is driving it? What do you think? Because I spoke to an economist earlier this week, and he was telling me, okay, probably this wage increases that Labour agitated for may not actually have so much impact on cost of prices as it were. What do you think is driving inflation in this country? At a double digits, though it has come down to about 10%, but still within double digits.
I guess, it's in the simplest form, it's people taking a long-term view on the Naira. And basically if you look at what we're doing in terms of, in crude oil production and oil prices, we're almost at an all-time high for both. So, you should be able to sort of intervene and meet some sort of demands requested. So when you see that, fluctuation in rates, and it tends to be more aggressive, you ask the question, are people tending to take are they shorting the Naira, so to speak, in the simplest way?
Don't you also think that the growth of foreign investment in this country largely depends on the nation's productive capacities or capabilities?
I think...
Do we have that? Since we're moving towards that, why don't we develop that capacity?
If you look at where Nigeria stands today, you have a lot of industries, a lot of sectors that will grow or that will foster effective development, investment, entry and exit, simply because they're massive demand stories. If you take example, data. Look at internet access. You're looking at 5% penetration or thereabouts. These are things that are going to. You don't have to be a rocket scientist to realize that people are going to require more data over time. Even before you start getting to more advanced capital goods, look at things like just food processing. Look at food retail, and look at how that has exploded and how that has expanded. So, from an investor point of view, you still have a lot of upside potential simply because you have such a latent demand there, and we're still a long way from when you actually start getting crowded out in terms of assets that it's a bidding war for assets. Right now, it's the investor that actually has the choice of assets right now.
How about the question to retain FDI in the long run? Because we are not talking about only attracting them, isn't it?
Yep.
We're talking about attracting them for long term. The question of retaining them, what do you think? Because some companies have actually also left due to unfavorable business landscape, as it were.
Once again, let's split FDIs down. I think the IMFs and the Propacos and the DEGs and the DFIs will be here for a long time to come. Their mandate is to fund development, and they've traditionally been doing it in worse macro conditions. Nigeria is in a much better macro position today as it was in the 70s or 80s. So under what
I like that. Is in a better macro position, isn't it?
It is.
Okay, go ahead.
Yeah. So there's an uptick on that now. So the FDIs, because it's their mandate, will stay there. The strategics will be here for some time, simply because it is. If you look at it from their point of view, they need to fuel their economy. So it's going to be, on the commodities, and you're not going to see huge value add in capital goods. I think what you will find interesting is that slice that comes from people who are domestic demand driven, who are the people who are buying into the Nigerian telecoms, the Nigerian food retail, the Nigerian burgeoning middle class story, and that's those are the inflows that I'm most keen on seeing ramp up.
The financial crisis in U.S. in Europe right now, where do you think that we'll see more foreign investment coming in? Of course, we've seen so much of Asia and Africa, particularly China and India. Where do you see foreign investment moving forward? Are we seeing now the U.S. losing its position, as it were?
As a destination,
yes,
or as an investor?
As an investor.
If you look at it, the U.S. is no longer, even from a trade partner point of view, they haven't been our number one trade partner for exports, but not for imports. If you look at it, it's mostly from Asia. So you've got about 30% of exports heading to the U.S., but that tends to be commodity-driven growth. Commodity-driven export. So this very same subset of people that are putting that the capital in I think will go up the value chain. So you're going to see a lot of money coming from the Middle East. If you look at what they've done in telecoms, they have relatively restrictive markets. You're going to see a lot of inflows continuing, not just in Nigeria, but across the coast of Africa in oil exploration and production, traditional staple, simply because it's one of the few bastions in the world where you can't do what you can do in the Gulf of Guinea elsewhere in the world. You can't, basically own and operate near production or near-term oil wells. So it's an interesting destination from that perspective, especially for the strategics. A lot of strategics in terms of alpha, in terms of growth, in terms of profitability will be here, but that's once again that's a strategic play, not necessarily a play for strictly financial investors. They will piggyback on the back of that, but you're going to see a lot of strategics doing those deals. And what that does is, once you create those deals and you create that M&A activity and you create that sort of cross regions. Or of course, if you look at Africa as a region as opposed to just Nigeria as a single entity, look at what's happening to either side of us. Look at what's happening in Equatorial Guinea. Look at what's happening in Angola. Look at the recent GDP growth in Ghana, and look at that. So it becomes all of a sudden a very attractive destination for several people. And once you're here, surprisingly, although it doesn't always rank like that, you ask the typical person. I was sitting with some Chinese colleagues the other day, and they seem to rank Nigeria higher. Or slightly, at a disadvantage in terms of doing business than, a lot of West African countries.
Right.
That's not necessarily, and it could be a perception issue. It could be a fact that, you land in Nigeria and just the sheer volume, which is an opportunity, but also quite daunting. It hits you immediately. So you just get off a plane and you've flown from Shanghai, and you're not a strategic who's there to drill oil, but you're just looking for, to sort of, pitch your tents and do something. Then it does hit you.